The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, joining us now here on Market Talk as we take a look back here at the week of trade, there has been plenty of things that we've seen that we need to discuss. A pretty good day Friday in the grains. Livestock was a different story. Outside markets continue to be very newsworthy, to say the least. Gold, coffee, cocoa, things like that, crude oil, etc. We're going to talk about all that here today. Joining us now for a conversation, Kent Beadle with Paradigm Futures is back with us here on Market Talk. Kent, thanks for being with us. Really appreciate it. Hope you're doing well.
Yeah, I'm doing great. Thanks for having me, Jesse.
Well, we can go about a million different directions, I think, in terms of the market action here this week, Kent. Yeah. And I'd say, for me, let's start with the USDA report that we got Thursday, plus the CONAB numbers, the Rosario Grains Exchange, a lot of data. And largely, I feel like the trade is kind of trying to figure out who's right in terms of those South American numbers, Kent. That seems to be one of the big grain-related headlines we've had here this week.
Yeah, it's kind of interesting because there's been fairly sizable discrepancies now for 2 or 3 years between the USDA's assessment of Brazilian production and Brazil's own assessment of Brazilian production. In these last couple of years, the USDA has taken a much more optimistic view of yields in Brazil. And this last year here, they even went so far as to, on a couple of occasions now, raise the prior year's crop. And they've been doing this primarily because they believe that these cannot be ending stocks, but that instead that they must have had more production. Okay. That's one of the discrepancies where, I think the marketplace might have a little bit of problem because, it is possible that because they're priced properly, that the Chinese have just essentially bought them out of the prior year's crop of grain. And that's what allowed them to export the amount of product that they did. Mm-hmm. Now we're into a new harvest, a new year. And I mean, there's a lot of interesting things going on because, Brazilian export premiums now, and they're about 85% harvested approximately. This would be exactly the time when you would expect, those premiums to be bottoming out, harvest time lows, et cetera. And we're about $1 a bushel off of the lows that we made in late January. So there's certainly some cash market sentiment that maybe the crop really isn't there. And so that's why traders were expecting to see at least some movement from the USDA towards some of the CONAB numbers. And of course, the CONAB number came down again. And it's currently about 8.5 million tons below the USDA estimate. And we would have expected that maybe the USDA would have come down 2 or 3 million tons toward that number. When they didn't, obviously it triggered a very bearish response yesterday. Mm-hmm. But what was interesting then about that is that, we didn't get a lot of follow through, especially in soybeans early on. We didn't manage to hit, the prior week's lows. And ultimately, we found a little bit of support, and that followed through here today. I think we got a little bit of help this morning when the Buenos Aires exchange lowered the corn estimate in line with what Rosario did yesterday in Argentina. And of course, the USDA's numbers in Argentina, they did come down a little bit on corn, but it started to get, I think, in the trader's head that, hey, maybe there really are issues down there. And maybe this time the USDA isn't the one that's right on this issue. So, I think the only thing that we're going to be able to do is to, number one, watch the cash markets. Number two, watch, the amount of grain that Brazil is loading, and then watch what the rest of the world market is doing. Is there a need to come to the U.S. for any supply? Well, guess what's happened this week? We've had 3 daily announcements for 2 cargoes each day of soybeans sold into unknown destinations. Now, one of those was new crop, but 2 of them have been old crop. And unknown destinations in many traders' minds means China. And that's a really, really interesting dynamic for that to be happening here in the middle of April. So again, you have some things lining up that maybe suggest that the USDA is going to have to reevaluate what the size of that crop in South America really is.
Well, Kent, thinking about this too, seasonally, as we're getting into spring planting season, and talk to me about this a little bit for the grains. Isn't this typically a window where we can maybe get a little bit of a rally, put in a little risk premium as we, don't know what U.S. weather's fully going to be here for the summer? So we kind of we have a chance to rally typically in this window, don't we?
Yeah, we do. And here's the reason why. We get numbers, say, in February from the USDA Outlook Conference. And then even, the numbers that we get from the prospective plantings report, and everybody puts them in their balance sheets. And then they stick a trend line yield on it. And then we go, oh, we're going to produce this much. Well, this much needs to have timely planting. It needs to have decent rainfall, and but when you're in February or even in March, all of those weather things are in front of you, and so the market has a tendency to like to essentially put that upcoming crop in the bin. All of the sudden, we now have to start watching the weather. And what are we looking at right now? Well, to begin with, we're still looking at a soil moisture profile that is a little drier than normal for a good portion of the Corn Belt, skewed more toward the Western Belt to be sure. But then we also have to start watching what our planting progress was going to be. And, that was another area where a lot of folks were very bearish because of the soil moisture profile. We thought that we were going to get in early because of the lack of snow in the Northern Corn Belt. We thought we were going to get in early. And all of the sudden, well, we still don't have any real snow now in the Northern Belt. We did have to, melt about a foot that came a couple of weeks ago. But it's actually been a little cooler than you might have expected for not having any snow cover. And then we've had some series of rain, and now it's going to get cold next week. And all of a sudden, you start looking at the forecasts and say, well, we're not going to actually get ahead of our normal pace. At least not based on the weather forecast that we currently see. So all of the sudden, the idea that we're going to get to the end of April or the first week in May or even May 15th and be, 10, 20 points ahead of schedule, that's sort of out the window. And that head of schedule sort of progress is something that the USDA would use to possibly up yield estimates in June if that happened to take place. But now, we're just going to have to keep waiting and see, well, how much rain are we going to get? Are we going to be able to shrink up these drought areas? And then, of course, we're going to be looking very anxiously ahead at, later season weather, because we are shifting from this El Nino that we traded last year that was supposed to give us, above trend yields, gave us a record yield in corn, but it wasn't above trend. And now we're going into a La Nina, and sometimes we get some pretty bad crops with La Nina. Some of the correlative models that you get from different weather forecasters are anticipating a warmer, drier summer. And, there are various variations, I guess, on that theme. Some people think it's going to be further to the south, but there are certain models that definitely have a bullseye right in the heart of the Corn Belt. And if that would happen to come to pass, well, all of this additional supply that people are worried about could disappear very quickly.
Another aspect here I want to ask you about is the sticky inflationary environment. We had hotter than expected CPI, PPI data out this past week. You look
Yep.
Friday at the outside markets too. I mean, gold is seemingly going parabolic here. It was up $60 at one point.
Yep.
Crude's been strong on the geopolitical concerns in the Middle East. You
Yep.
got coffee, cocoa shooting higher, things like that. I mean, and then the stock market under heavy pressure, dollar higher. There's a lot going on. There's a lot of fodder in the outside markets, I guess, Kent, that we really need to pay attention to, don't we?
Yeah, we sure do. Last week we had a pretty sizable breakout in the Goldman Sachs and Bloomberg commodity indices. Due to those sharply higher prices, and some of them definitely were metals, and of course, crude oil has been trending a little bit higher too. And an awful lot of folks had gotten awful bearish crude here for a while because of, well, we had the capacity, and we still do have the capacity to outproduce consumption, but we're not doing that right now, and we're not doing that for a lot of reasons. You've got the Ukrainian attacks on Russian refinery capacity. You have decisions being made in OPEC plus. And then, when the markets pulled back a little bit, you actually had the U.S. Pulling back a little bit as well. Average daily production went from 13.3 million gallons per day or million barrels per day, excuse me, down to about 13.1, where it's held steady now for a few weeks. So a lot of different, moving parts and pieces. And, this impact of the PPI on the stock market is put a little bit of a pall into the protein markets. Okay, so cattle doesn't like a sharp correction in the stock market, because a sharp correction in the stock market makes consumers a little bit more nervous about their personal finances, and it tends to move them down the chain a little bit in meat consumption. So a little more hamburger, a little less steak, dragging down the value of that beef cutout. And we already had some problems in cattle going into all of this. We were backing up supplies. We were placing a lot of cattle into feedlots, but we were not marketing nearly as many cattle as quickly. And of course, weights were going up. And so you have this large increased supply. It looked like we were kind of getting through it. We were probably going to come out the other end. And then we have, bird flu in dairy cattle. And that sort of became a catalyst for the speculative side of the market, who had gotten long cattle again, to start moving toward the exits. And so, we still have a fairly sizable discount of futures to the cash because we've been so weak, and maybe we'll start to shrink that up. We're going to have to as we get closer to the end of April delivery. But we had a lot of things kind of come at us that really drove cattle prices lower. And for what it's worth, I think this big move lower in the cattle have kind of finally spilled over into the hog market as well. It's been an interesting market there, because we had last week what appeared to be potentially a fairly bearish hogs and pigs report, with revisions higher in previous inventory and a few more pigs than the trade was looking for. But what we've been hearing from our boots on the ground is that packers have been just very, very hungry and have been trying to get pigs bought, kind of suggesting that there's been some disease pressure within some of the integrated units, and they've been pushing to buy pigs. Well, eventually here, we've had lower corn prices, lower meal prices, really high hog prices. Some of my calculated hog crush margins had gone out to very, very historically high levels. I think this was the best hog crush for December, maybe in 3.5, 4 years. And ultimately, and then as you see cattle prices going down, I think it gets in the head of the hog producer that, hey, maybe I ought to get some of this margin locked in. And I think we're seeing some of that today too.
Great thoughts, and I'm glad you tied the outside markets together with proteins there. I was kind of thinking the same thing, maybe a combo of the HPAI news cycle and the pressure of the stock market there on Friday. Let's wrap this up here, Kent. And great stuff as always. Final thoughts. I feel like the biggest thing for me for producers right now is they're putting more focus on planting, maybe not as much focus on the markets, but you got to be a smart risk manager here with all of this volatility going on, right?
Oh, of course. And so, one of the things that we're looking at is, and we look at this every year, can we lock in? Can we hedge profitability? All right. And one of the things that we know cyclically is that while it's not a function of the market to make sure that a producer makes a profit. In fact, that's way down on the bottom of the list. Ultimately, growers have to be able to make some return if they're going to stay in business. And so that means that we need prices when supplies are adequate. We have a tendency for prices to coalesce around cost of production. Okay. Mm-hmm. Right now, we've been through a cycle here where prices are actually below cost of production. And so what I'm telling my clients is we're going to be patient, but we're going to be ready to act when the marketplace gives us an opportunity to lock in profits. And we are not going to anticipate huge profits or large profits. Now, a drought could change things, but a drought is going to hurt production, and we always make more money with bushels. But we do have to anticipate that markets are going to do what they seasonally do, as you referred to earlier. This is a time of the year when we normally get some opportunities, and we want to be watchful and mindful that those opportunities are going to be there, and want to take advantage of them when they come. But right now, December corn futures are still underneath cost of production by 30-40 cents. And so we're looking for some opportunity to lock in, profitability when the market gives us a chance.
Great conversation as always. I know folks can reach out to you and the team there at Paradigm Futures, paradigmfutures.net. Kent Beadle, always good to chat. Thanks for joining us on Market Talk. Have a great one. We'll talk to you again soon.
Thanks, Jesse. Really appreciate you having me on.
That's going to do it for the show today. Find us at markettalkag.com. I'm Jesse Allen. Have a great weekend.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@markettalkag and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.